I'm creating a death folder. So do you know what a death folder is?
Hi everyone, welcome to Albans Property Meet, May 2025. Wow, and today we've got another guest today who's going to give us some insight. Victoria.
Yep. Nice to meet you.
Thank you for sharing some of your value. Please tell the audience some of the things you've done, because you're talking about sort of blocks and commercial mixed resi. So please give us a bit of insight.
Well, I started off with residential. I do single lets. I love doing refurbs. Key for me is being able to add value. Most of my properties I source through options. Risky, but that's my appetite.
Lease options?
Yes.
Wow, okay, wow.
So I do lease options, but I also do the traditional options, where I'm able to source using a bridge loan, add value by doing a refurb, pull some money out, and then go again. So that's worked well for me.
So you're doing flipping? You're selling the properties,
no, I don't
or
sell.
you're selling the deal?
I
keeping it?
I keep it. I put some money out.
You're doing the BRR?
Yes.
And you're holding?
And I'm holding, correct.
Wow, okay.
So that's my preferred strategy.
Got it.
Currently, due to stamp duty, I now do mixed-use property, where you've got commercial at the bottom and residential on top.
Let me give insight to the audience why Victoria is mentioning the stamp duty. If I've got a mixed commercial element and a residential, the stamp duty is generally done on commercial basis, which tends to be about 5% at the highest rate. So it's quite efficient and it's a good way to minimize your stamp duty. Whatever I mention, always get professional advice on your scenario, because I know I have some fun saying, see, you didn't talk about this. I'm just giving an example. Yeah. Sorry, carry on, Victoria.
So doing mixed-use property, for me, that also adds a little bit of element of diversifying my portfolio. So I've got commercial leads at the bottom for the tenant, and on top, I've got the residential aspect. So for me, it's not a HMO, but if you've got two flats on top and a shop at the bottom, that's 3 sets of income, rather than having just the residential tenant. And down the line, as you were advising, I might be able to slip the title deed.
Yeah, I think one of the biggest things I've been speaking to entrepreneurs is, how do I get the value out of the block at the new value? Because right now you've probably got a commercial loan, right? So commercial loans, no disrespect to anyone who's in financing, commercial loans cost more and they're done on a different basis. But when you've got buy-to-let residential properties, if you split and you write the right structures, right advice, your financing could drop and you'd have more.
Okay.
And it's not variable depending on the rent, because commercial loans are based on the rent, on the yield basis. So it can be a game changer, and a lot of people are pulling a lot of money out to go again by just doing that move.
Correct.
But you need the structure in place, otherwise you're going to get hammered on tax.
That's why I'm speaking to you.
Well, this is what you meet with so many entrepreneurs who've got so many great ideas and they're doing stuff. I want to ask you a question. How did you find the permitted development process? What year did you do it in?
This was 2021.
Okay, so it was pretty new at that time.
At that time, yes. It was good. I had an architect do the drawings. We submitted it to the council, and lucky enough, within 56 days, we got it approved. So it was quite straightforward.
So any of the people who don't know, when you go commercial to resi, you've got special rules called permitted development where you don't need formal planning. And what you do is you apply for these PD, provided it's in that criteria. Always look at that. And now they've got even more strict criteria about minimum space standards, which they didn't have probably back then. Right? So you need to get that, otherwise you're not going to get financing, and also you're going to have a problem down the road. So if you do that, 56 days, it gets agreed. Happy days. Otherwise they have to tell you why not, and they have to have specific reasons. So it's to stop, no disrespect, the council's blocking your property conversion, and therefore creating more properties for people to live at, because that's the name of the game. That's why they've got there.
Yes, and that's worked very well for me.
And how did you learn about this strategy?
I've been on a few courses, and there are lots of resources out there. So I just keep myself engaged, see what's new, keep on touch with the legislation, always networking as well.
So obviously you've invested in knowledge.
Yes.
So that's one of the things I want to get out is, the reason why Victoria knew all about this is she invested in knowledge. So anyone who's doing any strategies and they want to get really into it, have passion, get investment, get clarity. We recommend doing a roadmap session because then you know where you're going. Because you only achieve stuff when you got detailed plans and timelines linked to it. And most people don't, and therefore then they're like, oh, it doesn't work. It does, but you didn't get the right support, advice, and get the strategy in place. Victoria, thank you so much.
Thank you very
really
much.
appreciate it.
You're
What a great
welcome.
week.
Bye-bye.
Hi everyone, we've got another guest. Well, I should say, going to be the new new host going forward from July onwards, isn't it?
Yeah, July, that's right.
Richard, thank you for joining us.
Thank you, Z.
And Richard's going to give us a bit of insight about your property strategies. How have you benefited in property? Please share with the audience.
Right, well,
You've done everything.
I've made a lot of mistakes over the years. I started in property in the mid-90s. I started doing buy-to-lets. I grew my own portfolio whilst I was also, I had a good corporate career. 2017, I decided to come away from the corporate and just focus on my property business. So I've been growing that. I've been using virtual assistants from the Philippines to help me scale up my business.
Wow.
My main focus now, Z, is serviced accommodation. So that's really my main strategy right now. And I do training for people like PIN on serviced accommodation and other things as well. So yeah, it's been quite an interesting career so far.
How have you found, obviously, the tax changes? That's obviously going to hurt a bit of SA, service accommodation. Are you still leaving them as see-through or potentially looking at change of planning and all this stuff?
We're going to have to.
Yes.
It's going to be compulsory. Okay,
It's gotta happen.
we don't know the details yet. That's going to work its way through. But yeah, there will be a new planning category, and if you're doing serviced accommodation as a business, then you're going to have to follow the rules. And also this whole TOMS thing. I don't know if you're familiar with the TOMS, what's going on there.
So that's a tour operating margin scheme,
and
that's about how that is charged as a case that just went through around that.
That's right, yeah. So there's a lot of uncertainty when it comes to the whole serviced accommodation. But you know what I believe? Uncertainty builds opportunities.
Love it.
So you're going to get people that are going to exit the market. So that means if you're running a proper business and you're adopting these changes, you can make them work to your benefit.
I always say to people that when, as you rightly said, when there's uncertainty or lack of understanding, these are opportunities because if people invest time, knowledge.
Yeah.
Same in our profession when you're doing tax, accounting, finance, especially property. It's a complex area.
Yeah.
And I always say to people, go to a specialist rather than what we call GP, general practitioner, because you're going to get caught with your towels down.
Oh, totally.
In a nice possible way, because it's a total specialism itself.
And as your business changes, you need different specialists. So when you're a startup, when you're first starting out, you don't need a tax advisor or an accountant that really they specialise on big businesses. You need somebody that specialises on the startups and they can give you the time and what you need at that stage. If you're selling your business, you need somebody completely different.
Yeah,
it's got another niche. So
I think if you're starting with a good professional advisors, you start with the exit in mind.
Yeah.
Because if you do that, then you plan, even if you're not going to exit.
Yeah.
Because it's all about legacy, and because trading businesses and property businesses or property investment business, they're treated so differently. So you need to know that journey. And there's another component called SaaS pensions.
Yeah.
And if you know all of this is where the value and the multiplier happens. And I've been I was on Sajid Hussain's podcast today up in sunny Birmingham. I was watching, got back, it's been a long old day. And one of the things I was talking about is roadmaps.
Yep.
If you haven't got a 10-year roadmap strategy, I'm sorry, but you're unlikely to achieve.
It's like driving a car without a sat nav, isn't it?
You've hit the nav. Sat nav to get financial independence.
Yeah.
And that's what you're trying to do with your outsourcing, because that's your trading business.
Absolutely.
And that's where probably the cash flow comes from initially, and then you learn how to do it tax free and park it. In property, pensions, etc.
It's that, and yes, it is a cash flowing business. But what I love in business is helping people. And so for us, okay, people come up with an idea initially, don't they? And they think, I want to start a business, okay? And they've got some kind of idea. And at the end goal for most people is the same, which is financial freedom. Okay? So they're going to go on a journey from an idea to financial freedom. So what we try to do is hold their hand on that journey. Now, we don't know everything. We're experts in certain areas.
Yeah.
Okay, like building teams and systemizing and processes
So
and this
important.
sort of thing, AI. But when it comes to tax and when it comes to SASs and things like that, we're not experts in that, but we know the best people in the country that are. So we can then refer people on to other people that can give them that knowledge to help them on the rest of the journey. And you know that I'm really passionate about what we do.
Yeah, because it's the compound. Because I speak to clients, they don't understand the compound impact. You've got to literally, because today's podcast was about how people are losing 70-90% in the pound.
Yeah.
And most people don't know that's happening.
Yeah.
Because that's what's happening to your money.
Yeah.
So as soon as you realise, oh, okay, I need to engineer that process so I can make better decisions on my money.
Yeah.
No disrespect, government, right? You do pay your tax the right amount, but when you're an entrepreneur, you have a choice. Do I consume now or consume later?
Yeah. Yeah.
And do I consume when I've got cash flow to pay for the consumption, or do I consume my investment money capital now? And that is the difference.
That is the difference. And actually, the answers to the questions are always, well, it depends. You know, there's no black and white answer. It depends on the investor, the business owner, what their objectives are. Like you just said, focusing on the end goal and then how you're going to get there. And that roadmap can be different for different people depending on what they want to achieve.
Yeah, and some people obviously motivation. That's another area where a lot of people fail. It's not one of the pain points is motivation.
Yeah.
You know, what do they want? Because they need to reward themselves in the journey. They're all work and no play is not all good either, and that's not successful either.
No.
So some people, I want to send my kids for school fees.
Yeah.
How do we do that?
Yeah.
Some people, I want the Lamborghini.
Yeah.
Great. Some people, I want the family legacy. The list is long.
The list is very, very
and
long.
And that has to be incorporated in this plan to actually deliver. And for me, property is definitely one of the biggest strategies. And it's a few things I've saying before that gives you another number of different leverage points. No other asset does that.
No, that's right. I mean, you know, if you go to the bank and you say, oh, excuse me, but would you mind lending me £500,000 so I can go and invest it in, you know, in crypto? It's going to be a very short conversation.
You'll give a few people a heart attack on that. I did an episode on Sky on that. She's going to do about crypto because people don't realise the tax implications.
Yeah.
It's treated not like money.
But property is about leverage. You know, it is about leverage. You don't need to come up with all of that money yourself at the outset, and also it's not, you know, it's going to generate your cash flow, but it's going to give you capital growth over the long time. So, and again, depending on what's most important to you, that's going to help you decide your strategy, your location. So many different decisions to make. Yeah.
Richard, looking forward to you obviously being one of the hosts going forward. Thank you for sharing so much, Mallet.
Thank you,
I really
Z.
appreciate it.
Really enjoyed the chat.
Albans
Thank you
Property
very
Meet.
much.
As everyone knows, the co-host recording a second time, there may be a blooper, Julie, and it's the real Julie, as I keep on saying, not her AI twin. Julie, thank you.
So at the moment we have so many grounds under Section 8 that a landlord can use if they want the property back. Under the Renters' Rights Bill, we're going to have new grounds and amended grounds. Now, the most important one is going to be Ground 1 and the new Ground 1A. Ground 1 is the landlord wanting to move back in. Ground 1A is the landlord wanting to sell. Now, Ground 1 is only if the landlord or the landlord's family member want to move back into the property. Now, a few years back, we had a scrambling of people wanting to incorporate themselves, make themselves limited companies, so that they could avoid Section 24 of the Finance Act and the tax implications there. The issue we now have is if the landlord wants to move back in and the landlord is now a limited company, they can't move back in because they can't move into a property as a company. Therefore, Ground 1 is completely off the table for any incorporated landlord that wants to move back into a property.
Just give a little insight on that when the old tax act went. They can move in, but what happens is there's a huge tax implication.
Well, no, they can't because they can't use this ground.
Oh,
Because
they
a
can't
limited
use this rule
company
to move in.
can't
Right.
move into a property
Wow.
because the limited company isn't a physical
That's
human
good.
entity.
So even though before they could move in, right? because it's a limited company and because the limited company owns it, it's a separate personality. Then they've lost this opportunity.
Absolutely.
And putting the tax to one side because it's huge. You normally wouldn't move into a limited company that you own and you put the property because there's huge tax implications.
And also, a limited company can't have a family member because a limited company won't have family. It's not a human.
Is there any provision for this?
No, absolutely not.
Wow, as always. So what is someone supposed to do?
The only options available to a limited company would be using the other grounds. So to sell, for example, a limited company could still sell the property. They would be allowed to do that. But if the limited company only has one director, so Mr. John Smith, and he wants to move back in, can't do it.
So if they want to sell, just thinking with the hat on here, could they actually sell within a group structure? Would that considered a sale, or is it not allowed to be sold to a connected party?
There's no stipulation on that. It just needs to be sold or going on the market for sale.
Right. And then they can take the
Who
person
they
out.
sell it to is irrelevant. As long as they meet the criteria of selling, then that's perfectly fine to use that ground to evict the tenant because the landlord is going to sell.
And there's no provision to stop selling to an associate company of yours? No. Wow. So, as you always see, this is some insight, some value. So you could actually do that. If you're smart in a group structure, it doesn't trigger no tax off either. Oh wow. Okay, so you have to really think outside the box here. And if people haven't got a group structure, they're going to get hurt because if you sell outside there, you're going to trigger all the taxes off. It's not what. Ooh.
Yeah, see?
So get a good account, and obviously they will never move into it. Obviously, the limited company owns, but if you actually move into your property, your limited company owns, you're going to trigger something called ATED, annual tax envelope development. Nasty if it's over 500k and it's a residential. That's first tax. Second tax is the dreaded benefit in kind. This is nasty if you're moving into property because you're using a company asset for personal use. People don't know this. And this is why never ever live in a property that your limited company owns. So now it's looking like there's even another problem.
Absolutely. And additional to that, I just want to add about stamp duty land tax. So it's a little known thing, and I'm sure Z is either going to correct me or agree with me, so I'm quite frightened right now, that a tenant in occupation, so an assured short hold tenancy, or what we're going to have under the Renters' Rights Bill, an assured tenancy, once the tenant has paid enough rent to reach the stamp duty land tax threshold, the tenant is actually responsible for paying stamp duty land tax at 1%. However, under the Renters' Rights Bill, because we're now going to have periodics from day one, so there won't be any breaks in that, they're actually amending the Financial Act to actually stop that. So tenants who are renting for a long time, 5, 10, 20 years, and pay enough rent to meet the STD rate, they're not going to have to pay stamp duty land tax at 1%. That's being eradicated.
That's a really good insight. That's in the Finance Act 2003, and there'll be an amendment for that. The challenge we have a lot of times is most people don't know about that. Mm-hmm. And what I actually saw a case on that. It depends on if it's the same tenant, because normally most property, if you add the rent up, depends where it is and depends on what price you paid for it, you're never going to meet those thresholds.
Correct.
And it's not going to be the same person. So, and also the special rules about breaks and all the rest of it. So they're actually abolishing. Is that part of the Renters' Right Bill?
It's one of the things, so
propose?
The Renters' Rights Bill itself isn't amending the Finance Act.
No, but
the Finance Act are choosing to amend themselves so that it doesn't trigger this, because obviously there's no way of breaking the periodic if someone wants to stay there for life. There's no way of putting a break in. So the Finance Act themselves are putting in that break so that tenants aren't then responsible.
Wow, that is a huge, huge update. I will be looking into that. I've not seen that yet. When is that likely to come in?
That will come in with immediate effect of the Renters' Rights Bill in October.
October 25?
Yeah.
Wow. So there's an amendment. Julie's giving some great advice there. Always go and get advice on it for your situation. Just make sure, because there's so many caveats, as all the fun on TikTok and all the other places. I always say professional advice, but these are about giving you ideas and insight of what options there are and how to mitigate them potentially. Julie, thank you so much. You're a star, the real Julie, not AI twin. The final conversation today with one of the co-hosts, Craig, who loves country, Craig.
Is he?
And I love talking to him because he brings stuff up that I haven't even thought, and it makes me think, and that's what I love about it. Craig, you were talking about the dreaded, unfortunately, the thing that's going to happen to everybody.
Death. Let's talk about death, baby. But seriously, unfortunately, my partner lost her father, and I'm going through the probate process and learning all the intricacies of it.
Wow, there's a lot.
And he's got a fairly straightforward, estate.
Wow.
But as property investors, we have slightly more complex business structures and tax structures, and we may have investment things. And I'm learning through doing this probate. It's a complex thing, so I'm creating a death folder. So do you know what a death folder is?
Are you talking about step-step things that you need to cover?
Yeah, basically, if an executor had to deal with my estate, I've just sorted out my will. So in this death folder, it lists all of the properties that I own, all of the mortgage companies I've got, all of the businesses that I have, all of the investments. And for an executor to deal with my estate, it's going to be really complex. But if you create a death folder, you're actually making it much easier to pass on your estate to your loved ones for legacy planning. And you know all about inheritance tax and planning and how you can...
I think that's a really good point. A lot of people don't do that because you have to put this all into a will.
Yeah.
I assume you hopefully got something like that in place.
Discretionary trusts?
Potentially. This depends on what it is because there's something called the 10-year charge and all this. So it depends what you put in there. And start doing the planning.
Oh!
I promise it's not him thereafter.
That wasn't an ambulance, that was a police car. So
They found me.
And so it's so many
this
things.
is live as it happens.
And it's having that step-by-step planning. So you're saying you're going to put a list and help other people in the network say these are the things you need to think about because loads of people don't realise because it overlaps. There's the actual unfortunate death, but there's also the stuff that you should be doing before and putting it in place.
You want to make it as easy as possible for the executors of your estate so that your beneficiaries can get things because unfortunately there's a long complex process to get to the point before. And there's the tax man. Our lovely friend always gets his money first. You have to pay the tax man before you can get a receipt from him, before you can apply for the grant of probate. And it's only 8 to 10 weeks after you apply for the grant of probate, you can then distribute the assets to your loved ones. So the tax man always gets his money first.
Depends. If you get good tax planning and you do this before and in the right time, there's a lot of things to mitigate. But a lot of people don't. They always do this as an afterthought. And I use an example, and I say this to the audience. I've had people come to me in tens of millions of pounds of portfolios and said, "See, what can you do now?" But the person's already passed, and they're like, "It's a bit late now because you got a 40% hit." That's 40%. So 10 million, 4 million.
It's the biggest tax you're ever going to pay is inheritance tax.
If that's obviously, if you've got debt, it reduces it. But a lot of people don't realise this, and people don't plan. A question I ask people, and I was saying it today on the podcast, I ask people to give the relevance. I said, have you ever met anyone that's taken the money, left the world, and come back to tell the story?
Nope. There was some bloke about 2,000 years ago.
That's the person someone mentioned, Jesus. I said, I'm still waiting for him to turn up. When he does, then you can say. But right now he hasn't, and I think he got good IHT planning done beforehand, because I don't think he had anything in his name.
Go and talk to Z, get your inheritance tax planning organised. And not only when you've organised it, get a nice document. I called it a death folder, I'm sure. Put in the comments if you've got another name for it.
Yeah, I think also you need to get the full service because it's not just the tax side and getting your stuff, is also having the right legal representative, the right financing, the people that are actually going to, and trustees if you've got a trust, that are going to help whoever your beneficiaries are. And you have to educate those people because what happens? Do you know the biggest issue afterwards, after you spend a lifetime making assets? You haven't educated the beneficiaries, they spunk it all down the wall. In the nicest possible way. And that's what happens. But if you educate them and say, look, this is what we're doing a journey, they're going to realise the blood, sweat and tears that you've done. But a lot of people don't think like this. And it mind blows me because I see them all the time and it's not a nice feeling. I think it's the nastiest tax. I think it's a dreaded tax, to be honest. I think it's one of the ones that I don't really agree with. People might not agree, stamp duty, loads of different things, right? But this one is a bit nasty because it's catching someone at a bad time. At
a time when you can't change anything, but you can change it now.
Yeah.
So get your tax planning sorted now.
And also, Craig, second from last one of doing this.
Yep.
But we're also still going to see you here, yeah?
Yeah, Julie has been hosting this for 15 years. I've helped her for, I think it's at least 8 years.
Amazing.
So we're
Amazing.
retiring from being co-hosts, but there's announcements shortly, not saying the detail of who's going to take over.
Yeah, I've
but we're
heard.
still going to attend. But
I think we mentioned it earlier in one of the ones when we were interviewing the person. But it is really good. Craig, thank you so much. Don't you love the value?